In the shadowed corridors of economic history, where empires rise and currencies crumble like ancient ruins, the story of the dollar's impending twilight unfolds. If you've delved into the seven-stage cycle of reserve currency death, you already sense the chill. The US dollar lingers in stage 5, a precarious limbo of endless money printing and fragile illusions. That earlier narrative mapped our position. Now we peer into the abyss ahead. History doesn't whisper vague warnings. It etches a precise blueprint, month by month, crisis by crisis. We draw from four fallen titans: Portugal's Escudo in the 16th century, the Dutch guilder in the 18th, Britain's sterling in the 20th, and now America's greenback teetering on the edge. The descent from stage 5 to utter collapse spans a decade or two on average, a slow unraveling that masks its inevitability. Britain's pound, once the unassailable backbone of global trade, endured 22 years from its stage 5 entry in 1945 to the final gasp in 1967. The Netherlands clung for 18 years, Portugal 15. Averaging 18 years, this timeline echoes through centuries. The dollar slipped into stage 5 amid the 2008 financial meltdown, when the Federal Reserve unleashed trillions in quantitative easing, a desperate bid to stave off depression, much like the echoes of 1929's stock market crash that birthed the Great Depression. 17 years have passed since then, nudging us toward the historical precipice of stages 6 and 7. Yet this cycle accelerates, fueled by digital interconnectedness and geopolitical fractures absent in prior eras. What follows isn't conjecture, but a forensic dissection of Britain's downfall, the most vivid archive we possess. We'll trace its contours, then superimpose them on the dollar's horizon from 2025 onward, year by year, trigger by trigger. This isn't mere academic exercise, it's a survival guide. Stage 6 emerges as the quiet storm, a preparatory interlude where discerning investors reposition amid growing unease. Stage 7, the cataclysmic rupture, where fortunes dissolve in a torrent of devaluations and crises. Britain's saga from 1945 to 1967 serves as our compass, revealing how power's facade cracks, exposing the raw vulnerability of wealth built on paper promises. Stage 6, the erosion of faith, the frantic quest for alternatives. It's the era when whispers of doubt swell into a chorus, and the world begins to forsake the once mighty currency. For Britain, it dawned in 1945, victory's bitter aftertaste. The Allies triumphed over fascism, but Britain emerged hollowed out, its coffers drained by war debts, exceeding £3 billion to America alone, its factories bombed into obsolescence, its colonial empire fracturing like glass underfoot. The pound sterling, enthroned as the reserve currency since the Napoleonic Wars ended in 1815, clung to an illusory value of $4.03, propped by American largesse. This wasn't strength, it was dependency, a philosophical irony where the victor knelt before the lender, foreshadowing how empires often perish not in battle, but in balance sheets. Desperate, Britain secured a $3.75 billion loan from the U.S. in 1945, but strings attached. Convertibility of the pound to dollars within a year, opening the floodgates for exchange. When implemented in July 1947, panic ensued. A run on reserves that vaporized a quarter of Britain's dollar holdings in mere weeks. Convertibility was suspended, a humiliating retreat that signaled the pound's fragility. This mirrored the 1931 sterling crisis, when Britain abandoned the gold standard amid the Great Depression's grip, a precursor to broader economic woes. Emotionally, it evoked a nation's soul-wrenching realization that the empire that spanned a quarter of the globe could no longer command its own fate.
The dam truly burst in September 1949. Unable to sustain the peg, Britain devalued the pound by 30% to $2.80 overnight. Imagine the shockwave. Savers, investors, bondholders, poof, a third of their wealth erased in dollar or gold terms. This wasn't aberration, but ignition, shattering confidence like a fragile vase. Philosophically, it underscores a timeless truth. Currencies are but social contracts, fragile pacts of trust that dissolve when reality intrudes. In the 1950s, the exodus intensified. Central banks, once hoarding 80 to 90% of reserves in pounds, pivoted gradually to dollars, a shift accelerated by America's post-war boom and Marshall Plan aid, which rebuilt Europe while entrenching dollar dominance. By 1955, the dollar eclipsed the pound in global holdings, a quiet coup. Britain's trade supremacy waned, from the world's top exporter in 1945 to third place by 1960, overtaken by a resurgent U.S. and West Germany. The Suez Crisis of 1956 crystallized the humiliation. Egypt's nationalization of the canal provoked a botched invasion by Britain, France, and Israel. Facing U.S. opposition, Eisenhower's threat to sell British bonds, Britain capitulated, withdrawing in disgrace. This wasn't just geopolitical theater, it was economic theater, where the once imperial lion roared no more without Washington's nod. Markets recoiled, the pound plunged, reserves hemorrhaged, prompting capital controls that caged citizens' wealth, limiting overseas investments to government-approved dribbles. Such measures, historically, are the death knell of reserve status. They scream desperation, trapping capital while savvy players flee. By 1960, the pound's global pretense faded. It lingered regionally, buoyed by inertia and loyalty, but the dollar reigned supreme. London's financial hub endured, yet increasingly in dollars, not sterling. Stage 6's essence? Protracted agony, spanning 15 years for Britain, riddled with exit ramps. The 1949 devaluation, Suez's sting. Those attuned diversified into dollars, gold, or tangibles, evading the trap of nationalistic denial. Most clung to illusions, trusting assurances that the pound was eternal, a cognitive bias echoing today's faith in the dollar amid mounting debts. Beneath the surface narrative lies a clandestine chronicle, the maneuvers of smart money. While headlines blared crises, elites orchestrated escapes, British aristocrats funneling fortunes to New York vaults, Dutch merchants hedging with emerging rivals centuries prior. This hidden playbook reveals not just survival, but predation on collapse. In our era, it parallels the 2008 bailouts aftermath, where insiders positioned pre-crash, or the 1929 speculators who shorted markets. For the dollar, these strategies, diversifying into gold, cryptocurrencies, or commodity-backed assets, offer philosophical solace. Wealth's preservation demands vigilance against systemic hubris. As stage 6 wanes, the precipice of 7 looms. But before we descend into that vortex,